Thank you for joining, everyone. Today, we're going to focus on the income tax industry, why it's a fantastic industry. And while some of you may not be interested in understanding why the income tax industry is exceptional, it may help you analyze your own industry and give you some insights on the things you need to be thinking about to be able to explain why your industry is unusual, distinctive, important reason to join the industry. Because when people become entrepreneurs, the first thing they have to decide is whether they should be an entrepreneur or not, and then the second thing is the industry that they choose to be in. So I'm going to take you through, again, much of it is very specific to choosing the tax industry, but I think you'll get some big picture thoughts as to ways to look at your own industry to be able to define it better. So having said that, I've been in income tax for 55 years. Remember, I started in taking a tax course with H&R Block in 1969, 55 years ago. My father, November of 69, he decided that he wanted to buy a H&R Block franchise that I would run for him while I was in college. And we lived in a suburb of Buffalo called Hamburg, and they didn't have any H&R Block the previous year. He called up H&R Block and said, well, we'd like to buy a franchise. And they said, as a matter of fact, we're going to open a company store on Main Street in Hamburg the following year in January of 1970. And maybe your son could take our course and he might want to work for us. I took the course, I loved it. And one of the many blessings in my life, I found out when I was just 20 years old what I wanted to be when I grew up. And over the years, I've interviewed thousands and thousands of people. And one question I virtually always ask is, what do you want to be when you grow up? And you might be surprised that most people don't, at any age, whether they're 20 or 30 or 40 or 45 or 55, they haven't decided what they want to be when they grow up. So again, a great blessing to find out what I wanted to do. So in November of 1969, took in a abbreviated class. The normal class was 12 weeks. This was 6 weeks. I started 2 weeks late, and I just loved it. And I started working at H&R Block, and I just loved it. So again, I've been doing this for 55 years. So my footsteps, my journey can tell you what I think of this industry. Even though today we're in 8 different industries, I'll always be very, very fond of the income tax industry. So let me start with this advantage. And if you're young, you may not have heard this, but up until about 5 years ago, every year there was talk of a flat tax, that we're going to simplify taxes. Every election year, some congressman or someone running for president was going to simplify taxes, and there was going to be a flat tax. And they had the greatest solution, that we're going to abolish the IRS. We're going to get rid of the IRS. Well, I love discussion of flat tax, because once you get educated, you realize that it's impossible. And I'm going to explain that to you, that it sounds like a great concept, just have a real simple calculation. But with simplicity comes unfairness. Nothing fair is just simple. If, for example, if there was a law that if you killed someone, you would be killed. Well, what happens if I kill someone in self-defense? What happens if I was defending my family or my country? So whenever there's exception, there's complexity. And so there's nothing that's both fair and simple. And what would happen if they passed the flat tax? And I'll give you one example. The most common example that is proposed over the years that I've seen, and this has been proposed back since I can remember, since I first started. There's always been someone proposing a flat tax. So for 55 years, but I also said that over the last few years, it's become just a mumble, if anything. They're not talking about it much anymore. But let's pretend the most common example of a flat tax is a sales tax. That for every dollar you spend on anything, whether it's on gasoline or food or clothing or entertainment, whatever you spend money on, there's a tax. And we'll call it simplistically, for purposes of this discussion, we'll call it a 10% flat tax. Well, if someone makes just $25,000 a year, how much money are they going to spend of that 25,000? They're going to spend the whole 25,000, and if they can get a loan, they're going to spend even more. So if they spend 25,000, just 25,000, then their tax is 2,500, and their tax bracket therefore is 10%. Well, let's compare that to someone that makes 250,000. There, how much are they going to spend? Well, they're going to save $10,000. So they're going to save, and so they're going to spend 240,000. They're going to spend their tax is just 24,000. Well, their tax rate goes down to 9.8. So the lowest income earners are paying 10. The people that make 250,000 are paying 9.8%. Now let's say we get someone that's making 2.5 million a year. Well, let's say they save 250,000. They save 10% of their money. They only spend 2.25 million. Well, now their taxes are 225,000. Now they're in a 9% bracket. So the lowest they're in 10, second lowest they're in 9.8, and now you get the millionaires, they're in 9.0. And then you get someone that makes $250 million a year. Well, how much is he going to spend? He's not going to spend 100 million. His tax is only going to be a million or $10 million, but that's only a tax rate of 4%. So now someone making 250 million is paying 4%. Someone making 2.5 million making 9%, and the lowest 25,000 is paying 10%. It hurts the poor. The poor pay a higher percentage of tax. So that's the first bad point about a simple flat tax, is that it hurts the poor and it's regressive. It helps the wealthy. Well, even worse than that is, in this country, surprisingly, when I ask people, what percentage of people that have jobs, that have earned income or have income of over, let's say, $10,000 a year, what percentage of them pay no tax? You'll be amazed that it's nearly 50% of Americans pay zero tax. So now this guy that made 25,000, that was paying zero tax, is going to be paying $2,500. And 50% of the population wasn't paying any tax, zero income tax. All of a sudden, they're paying this new tax, this new sales tax. How many of them are going to say, thank you, government. I'm so happy I get to pay my fair share. I'm tired of all these millionaires paying all the taxes. I'm glad I get to pay my fair share. So 80 million Americans are paying zero tax, and they're going to now be faced with a tax bill based on this simple, fair tax. As soon as people understand the fair tax system, they're going to run for the hills and say, and they're going to vote out any politician that implements a new tax that hurts the poor and helps the rich. So I love it when they talk about a flat tax, because it scares some otherwise smart people out of the tax industry, because they can see it being abolished or going away. And so anything that keeps others out of the industry is a good thing for us, because in every industry, there has to be tough things. There has to be barriers to entry. If there's no barriers to entry, you don't have a great industry. Great industries have to have barriers to industry. So while we're on barriers to industry, let's talk about the biggest barrier to entry in the industry, and that is that it's seasonal. Seasonal is one of the biggest benefits, and I'll talk about that in a minute when I talk about benefits, but it causes the most difficulty in running your business is the fact that it's seasonal. And to make it even more difficult, most people think of the tax industry as running from January 1st to April 15th. However, that's 15 weeks. However, most of our business, more than half of our business at our level, at an ATAX level, or an H&R Block level, or a Jackson Hewitt level, that level customer base, most of that business comes in 4 weeks. There are 4 busy weeks during the tax season. There's a few busy weeks early in the season when the early filers get their W-2s. The reason they file early is they want their refund and they want it yesterday. And so as soon as they get all their W-2s, many of them work in more than one place. As soon as they get their W-2s, they're in your office wanting their refund as quickly as possible. And so early part of the season, late January and early February, one of the 2.5, 3 very, very busy weeks. And that is about when you go to an A-tax office or a Liberty tax office, that's 60% of our business is before February 15th. They almost all file before February 15th because W-2s are out by end of January and they received early February, and they're in your office filing. Another complexity with that part is that there's 2 kinds of customers: those customers that want their money quickly, and those that either don't have a refund or don't care. Now, as you know, you're American, you're required to procrastinate. You can't file early if you don't care about your refund or even have a refund. You have to wait until the last minute, and you can't even come in March. You have to wait until April. So the last week and a half of the tax season are also very, very busy. So we have a seasonal business where the vast majority of the revenue comes in just 4 weeks. So think of that. If you look at H&R Block, which is the industry bellwether of the industry, the benchmark that we target, their average location in the country does just over 300,000, between 300,000 and 350,000. So we'll round it down to 300,000. But most of that comes in just about 4 weeks. And so the other 11 weeks, so in 4 weeks, they're doing 150 to 170,000. And in the other 4 weeks, or the other 11 weeks, they're doing 130 to 150,000. So you have to adjust your behavior, and you have 2 different kinds of customers. So you have to adjust your marketing, and you have to hire right and staff the location right. And that creates all kinds of complexity because you have to have 2 different messages. And pretend that you are advertising on a radio station. Well, if your message is get your refund as quick as possible, and that applies to mostly younger, lower income customers, then you're going to want to be on a radio station that's that's for people under 30 or 40. Now, if you have higher income and complexity, home ownership, capital gains, 401k, things of that nature, rental homes, if you have higher income customers, they tend to be older. And you're going to want to not only have a different message, but you're going to want to advertise on a different station that attracts that kind of a customer. So one might be hip hop early in the season, and it might be a country station later in the season where you're attracting two different customers with two different messages. That is difficult to manage, difficult to get it exactly right. And your message throughout the tax season has to change. The hardest part about the seasonality is staffing. The tax preparers typically only make nationally, and again, we'll look at an average H&R Block since they're the bellwether of the industry. They're the standard. They're the largest preparer. So we'll look at an average H&R Block preparer. They'll make $20 to $25 an hour. They'll only work 300 or 400 hours during the tax season. So typically they'll make no more than $10,000 to $15,000, and that's their income for the year. And because it's seasonal, the preparers don't get sick pay, they don't get holiday pay, they don't get vacation pay. On April 15th, when you're laid off in the tax preparation industry, we say to the preparer, thank you, you did a great job. Please come back next year and work for us again, because retention of customers is directly related to retention of preparers. And we want you to come back next year. We're not going to pay you anything for the next 37 weeks. We want you to come back, and you can take a free tax course from us, so you'll be even more skilled next year and do a better job. But we're not going to give you any vacation pay, and we want you to come back next year. Well, who's going to do that? Who could afford to do that in this country? Well, in today's society, it's the great news is the baby boomers have been staffing our office for the last decades, that they just need some extra income. They don't need a full year job. The early retirees are the backbone of the industry. And we really have just two major types of preparers. It's not someone that needs a full-time job all year long. What it is the staff that works during the day tends to be early retirees. The staff that works evenings and weekends tend to have a second job, and they are, I fondly call them tax junkies. They just love doing taxes. And so H&R Block invented, before I started, you remember I took a tax course 55 years ago. So 5 or 6 years before I started, they invented a great scheme for converting normal people into tax junkies. And I got to say, when I was in college and working part-time in H&R Block, I was a tax junkie. I love doing taxes. And so much so that they almost didn't have to pay me. It was so much fun. So you get the tax junkies who and those are the people that staff your offices that don't need money, and it's very difficult. And since COVID, in all industries, I've seen in my study of business in our country, in all industries, virtually every industry, they're struggling to get employees. But we do very well in this industry. You'll find, for example, again, using Block as a barometer, that 90% of their employees have been there 10 years or more. So your goal when you look to hire a tax preparer, you look to hire someone you think, who's the best tax preparer? Someone that is skilled at knowing taxes, someone that's very personable, someone that's good at getting referrals, someone that's good at getting retention, someone that's honest, has integrity, and so forth. Those aren't the most important attributes. The number one attribute you look for when you hire a preparer is you look for someone that is likely to return year after year after year. If they're between jobs and they're looking for a full-time job, then that's not the person you want in your office. Because again, as I said earlier, a customer retention returning the next year is directly related to employee retention. And so those are barriers to entry: how to market, when to market, where to market, and how to hire and retain tax preparers. Those are barriers to entry, and we've solved those problems. And that gives us a leg up on others in the industry. So we have one of the highest retention rates of employees that in the entire industry. That's incredibly important. So seasonality causes problems. Let's talk about the positives in the industry, and let's start with the IRS. People decide to file and pay a preparer versus doing their own. And I'll talk about later about online versus someone paying a preparer. But they decide they pay a preparer for three major reasons. Number one is, and this has gotten more and more prevalent every year in my 55 years. 55 years ago, we had more of a do-it-yourself society. We made our own foods. You know, when I was in high school in the late 60s, I didn't ever go to a restaurant. I mean, in middle school, high school, I never went to a restaurant virtually until I became old enough to date and dated. Before that, we ate at home. There was no, I didn't even see my first McDonald's until I was in college. And now there's hundreds of different brands of fast food. And if you ask my children and my grandchildren and my great-grandchildren, how often do they eat out? They're probably eating out 5, 6, 7 times a week. Whether it's breakfast, lunch, or dinner, they're eating out. We want more services today. When there was no huge national brand like Molly Maid or Maid Services. There was no pool cleaning franchises. There were no lawn care franchises. We want more and more services. Over the last 50 years, more and more of us want more and more services. So now we even have people come in and we have mosquito services. We have people come in and put up our Christmas lights, and now they're expanding to Halloween lights, and et cetera, et cetera. We want more services. So as a society, we want more services, and we don't want to do our tax returns. You know, when we started and built the first tax software for an Apple computer back in '81, my dad said, someday everyone's going to do their own return on a computer. And as our children now are growing up with smartphones from virtually the time they can talk, I mean, they're 4, 6, 8, 10 years old, they're getting a smartphone. People thought, well, they're going to be so savvy, so tech savvy, that they're going to do their own tax return on a phone. Well, you can do your own tax return on a phone, but they're not doing tax returns. They're texting and Facebook and playing games, video games. They're not doing work on their phone. And so we want more services, and we don't want to do as much as we used to do. People used to repair their own houses, repair their own toilets, repair their own sink. I mean, people used to do handicrafts, and most people did themselves. Now people hire services. So one reason is service. The second reason is fear of the IRS. You know, in my career, thousands of people have told me, I'm afraid of the IRS. Thousands, maybe 10,000. Not one person's ever said to me, I'm afraid of the FBI or the CIA. People are afraid of the IRS. That drives people to pay a preparer. And as a result of that, sometimes people do their own return. They'll go online, they'll pay for to prepare their return. They'll bring it in for us to check it over and file it for them because they want someone to stand up between us or themselves and the IRS. Fear of the IRS is 1/3 of the reason people pay a preparer. So when the IRS sends out all these letters and all these, and there's threats, they're going to hire 80,000 more auditors, right? I mean, that just drives people to a preparer. And then the third reason is complexity and change. In 55 years of doing taxes, it's been different for 55 years. Not only do they change the Congress change the federal rules, but most of the states, over 40 of the states have income tax, and they are making constant changes. And the IRS announces new rulings, and the tax court has new rulings. And so it's both complex and changes. And they don't have a 1040 easy anymore. But when they used to have a 1040 easy 5 or 6 years ago, it was just one page. And it only had a handful of lines. But it had 28 pages of instruction. And in the instruction, it said that the average person is going to spend 2 hours reading these instructions to be able to complete their 1040 easy, the very simplest form. So it's changed every year. And as far as the eye can see, I would bet that every year in the next 55 years, it's going to change. That drives people to prepare. And there's this fear that, again, keeps people out of our industry. They're fearful that everyone's going to turn to online. These are the reasons they're not turning to online. And let me tell you what statistics about what's happened in my 55 years about online filing or computer filing, do-it-yourself filing. Well, when I started preparing taxes, 75% of the people did their own return by hand. It was done by hand. And 25% paid a preparer. Well, over the next 36 years, it went up about 1% every year. So the next year, 26% of people paid a preparer, then 27%, then 28%, 29%. That was mostly driven by people wanted more and more services. They wanted to do less and less work themselves. They wanted more free time. People were beginning to get jealous of their free time and having more free time, working less, having more free time. And so they wanted to have more free time and not do their own tax returns. So from 1969 to 2005, about 1% more people paid a preparer every year, till it peaked about 2005-06 at 60% of the population were now paying a preparer. And the rest of the population, now about a third of the other 40% were now buying tax software boxes. They were going into a Walmart or a Kmart or a department store and buying a box software, and they were using their laptop at home to do their tax return. Well, meantime, the internet is exploding, and now there's internet filing. And so what happened over the next, from roughly 2000 to 2000 today, back in 2000, about 40% were doing their own tax return by hand. Well, today almost no one does their tax return by hand, and almost no one uses box software. It's done on the internet. But the internet filing has grown at the expense of people doing their own return by paper and pencil. It hasn't encroached over the last, since it began, very much at all into people paying a preparer. But people who have never been in the industry before fear that, and again, that makes it a barrier to entry. From 2005 until 2022-ish, 21, 22 COVID period, it stayed about the same, about 60%, maybe some years it was 59 or 58.5% of people paid to prepare. Over the last couple of years, it's actually gone back up again towards 60%. So today, just as in 2005, about in 2024, about 60% of the people pay a preparer. But that scares some people out of the industry because they're afraid that it's going to be so simple that you could do it yourself. And also, what scares them is the IRS announced this year that they're going to have free software. Well, how many people do you think believe, how many Americans believe that the IRS is going to get you the lowest tax? They're going to go out of the way to benefit you and make sure you get every deduction you're entitled to pay the lowest tax. So again, there's been free tax filing since 1955 when H&R Block was founded. They were founded because back in the 50s, the average American would go down to the IRS and the IRS would file their return for free. And the whole concept of H&R Block, which became, within 10 or 15 years, became a Fortune 500 company. The whole initial concept was to open across from the IRS and with a sign, tax returns $5. And then over the years, within a couple of years, they changed $5 and up and so forth. And now it's the average fee is over $255, $260 is the average fee nationally. But back in 1955, it was $5. And they were, because people did not want to wait in line. They paid to not wait in line, number one. And number two is they really didn't believe that, and rightfully so, the IRS is going to go out of their way to dig for deductions to make sure you pay lower tax. That's not their calling. So internet hasn't hurt. Let's talk about the advantage of seasonality. People, the number one question I've been asked in my career is, what do you do the rest of the year? And it is obvious, and yet everyone that has not been in the tax industry that comes in as an executive or interviews for a job, they give me advice on what you can do the rest of the year in the business. It should be pretty obvious that when you lease an office for 12 months, and our offices, ATAX and H&R Block and Jackson Hewitt, our offices are leased typically 12 months a year. And it should be obvious that there could be something you could do from May to December to have income during that period, so that you don't have to have 95% of your revenue in just 100 days, just from January 1st to April 15th. You don't have to have all of your income in that period. There should be other things. And let me say this, there isn't anything that we haven't thought of, and there's probably isn't anything that we haven't tried or seen tried. We've tried everything you can think of. And there are things you can do. The best that's worked from my experience is insurance, selling insurance. Second best, a bit distant second to that, is accounting and payroll. Some do financial planning. There are other things you can do in the office that can supplement your income. But actually, people think it's less profitable because it's a seasonal business. What it turns out to be, and this is hard to understand, it's more profitable because it's a seasonal business. And the way I can say it is this way. Remember I said the average H&R Block in this office does $300,000 to $350,000. Well, their average rent is about 10% of their income. And that's not unusual for any industry. For whether you're in the hamburger industry, whether you're in the clothing industry, whether you're a garage, whatever, in industry after industry, that's not an unusually high rent. It just happens that all of our income comes in a short period. If I said to you that in 2025, you're going to have 300,000 of revenue. And I say, you can have it ratably over the year, 25,000 a month times 12 months. And you can get 25,000 in January, February, March, April, May. You can have 25,000 a month for the whole year, or you can have it all by April 15th. You can have 300,000 in your pocket by April 15th. What would you pick? Obviously, you'd pick, I want it all by April 15th. And then I said, but you're going to have expenses. The industry, for 55 years, the industry standard of profit is 30%. So at an H&R Block office, typically it's 30% profit. And so that means if you're grossing 300,000, you have $210,000 of expenses and 90,000 of profit. Well, if I said, okay, next year in 2025, you're going to spend $210,000. Do you want to spend that over the whole 12 months? Or do you want to spend that all by April 15th? Well, of course, you're going to want to delay that as much as possible. So the rent you're paying, $2,500, $3,000 a month, that you're paying after April 30th, is you've already had that money in the bank sitting there earning interest, and now you're paying it later in the season. So it's actually a good thing. And it's very advantageous, the fact that we don't have to pay sick pay or holiday pay or vacation pay. When you have year-round employees, you're spending 13, 14, 15% of your payroll in benefits, and maybe as high as 20, call it 15%. So it's an advantage that it's seasonal, because we pay no sick pay, no holiday pay, no vacation pay. If we were a year-round business, we would have to pay sick pay and holiday pay and vacation pay. So I say, thank you for making this a seasonal business. I wish it was even a shorter season. I wish it ended, I wish it was just 2 months instead of 3.5 months. It would be even more profitable. It's actually more profitable because it's seasonal. Potentially the best thing about the income tax industry is that it's one of three certainties in life. It's, 260 years ago, Benjamin Franklin said, there's two certainties in life, death and tax. No, I don't think anyone could argue that, except Dennis Waitley, a business author. I liked his book so much. He wrote in his book 35 years ago, he said, no, there's one more certainty, and that there's going to be change. And boy, is there going to be change. There's more changes every year. Over the last 30 years, there's been more and more changes. I saw just the news yesterday that I think it's the Tesla taxi or the Uber taxi. They're getting ready to have a driverless taxi and they postponed it for 2 weeks or 2 months or something. I mean, boy, have times changed. I laughed at my youngest son when he was about 6 years old. I was driving him to school, and I only had one hand on the wheel. He said, Dad, put both hands on the wheel. I laughed and said, what are you telling me how to drive, right? And I put my knee onto the wheel, and I put both hands up in the air. I said, look, son, no hands. I guess that wasn't really mature, but I did it. And he said, Dad, you can't fool me. You put it on autopilot. Well, he was visionary. He's 24 years old now. That was 18 years ago. I laughed and told that story 1,000 times. Almost all of it in front of him to tease him. And now it's come to reality 18 years later. And even 3 or 4 years ago, they've been testing autopilot. There's autopilot in cars. They used to only have autopilot in planes and trains. Now it's in cars. So so there is going to be change. And when you put taxes and change together, that drives people to prepare. When that's one of the biggest decisions people something changes in their life and they decide they need a taxpayer. They buy a home, they sell a home, they buy rental property, they flip a house, they have a capital gain, they have crypto, they have they cash in a 401k, they have a child, they get divorced. I mean, everything, every time something changes in your life, you have typically will have some kind of income tax event that changes your situation, and you should seek and get advice in those situations. So change is a good thing for death. I'm not going to say it's recession proof. There is almost nothing that's really recession proof, but it's certainly recession resistant. Still, the biggest uh, recession of my lifetime was 2008 and the crash in housing in 2008 and 2009. And just company after company going under. And that was the greatest recession of my lifetime. And in 55 years, I've been through like 6 recessions. And that was the worst one. But in 2008 and 2009 at Liberty Tax, we opened more than 600 locations. Starbucks closed 650 locations, if you can imagine. Because during a recession, you don't need to buy a fancy cup of coffee. You don't need to eat out. You don't need to buy a new house or a new car, but you do have to file your taxes. And we were the fastest growing company in the United States in 2008 and 2009 at Liberty Tax. We're a public company, fastest growing in the country. Wonder if any of you could guess who was the second fastest growing. It was actually Dollar General, because those family Dollar Generals, they prosper in recession because people can't even afford to drive out to Walmart. So they're filing more locally in the Family Dollar or the Dollar General. So they were the second fastest growing of all retail chains in the United States. But it's recession resistant. It's growing. It's the tax paying population, filing population has grown. It grows about 1 to 2% per year. And it grows because there are tax changes that require people to file to get refunds. There are refunds for low income taxpayers. So even if you have no tax, you can get a refund based on earned income credit. And there are other credits you can get in certain states for having even if you have very little income. So more and more the population is growing, and there are more and more things that you can take advantage of. So it's a growing industry. But it grows grows somewhat slowly, but it's a growing industry, and I want to be part of a growing industry. I don't want to be part of an industry that's shrinking. That's death, right? So I want to be part of a growing industry. This may surprise you, and I'm going to throw out this question. I want you to think of the answer before I tell you the answer. That if you take the 4 largest tax services in the country, and if you include A-Tax and Jackson Hewitt and Liberty and H&R Block, and say, what percentage of the people paying a preparer go into one of those tax services? So I want you to think about the answer. What percentage? And I'll give you a comparison that might surprise you when you find out the answer. But McDonald's has 25% of the hamburger sales, and more than Wendy and Burger King put together. But in this industry, the top largest name brands have less than 20% of the industry. Most of the industry, over 82% of the industry, is made up of mom and pops. And that's a real opportunity, because when we go into a market, a lot of people say to us, well, how are you going to compete with H&R Block? Well, when we put an A-Tax next to an H&R Block, and we do that because lots of my philosophies are stolen from not just my competitors, but other industry. I watched Burger King in McDonald's intently. And McDonald's spends $35,000. They do a demographic study and they find a location. Do you know how much Burger King spends? They spend zero. They get next to the McDonald's. And everywhere in the country I go, I see a McDonald's and a Burger King right next door, or as close as Burger King can get. And when Burger King opens, have you ever seen one that failed? No. And guess what happens to, not only do they not fail, guess what happens to the income of the McDonald's they're competing with? You might think that, okay, you have McDonald's sitting there in this small city of 25,000 people, and now you put in a Burger King. You might think that the sales of McDonald's plummet. Well, actually, they might take a little hit, but they continue to grow. They continue to grow. McDonald's has been growing forever. And they don't grow every year, but certainly their revenue this year was more than double what it was 10 years ago or 15 years ago. So they're growing despite the presence of Burger King. Well, if Burger King isn't taking business from McDonald's, where are they getting their business from? They're getting their business from their mom and pops. And that's what we do. We're never going to put H&R Block out of business. One of the advantages of this industry is I get to compete against H&R Block, and I've been doing it successfully for 43 years. And I've always been fastest growing, whether I was with Jackson Hewitt or Liberty or ATAX, fastest growing in the industry by taking share. But we're not having a significant impact on H&R Block. We take business from the mom and pops. So we don't have to be better than Block. We are, and we have some. That's the topic of another conversation, another episode. But we just have to beat the mom and pops, and so that national companies have so many advantages over mom and pops. I did a webinar on a couple of weeks ago on the advantage of being a franchisee in a franchise system versus being a mom and pop. So I had 30 different advantages. And of course, brand name recognition is huge. And the belief by the average American that big is good, and big is there's a stronger, higher quality from a chain versus an independent mom and pop in general, so that they're willing to pay extra for that. So those are the advantages of why I love the income tax business, why I've been doing it for 55 years, why they got to kill me to stop me. And we're going to take market share from mom and pops, where it's death in taxes. It's more profitable because it's seasonal. And there are so many barriers to entry, or even the good news is some of the barriers to entry are misperceptions by people who are smart people who haven't put a lot of thought into it. I haven't talked to 5% of the people in this country that understand that a flat tax is impossible, that it's virtually impossible, and because 50% pay no tax. So again, thank you for your interest, and think about these kind of discussions in your own industry. If you're not in income tax, and you should know why your industry is one of the better industries. You chose it, you love it, you're prospering in it. You should be able to identify the positive things that differentiate your industry from other industries. If you're looking to grow, especially as a franchisor, or if you're looking to grow your customer base. Thank you, everyone. Have a great day, and we'll talk to you again next week.